Wednesday, November 2nd, Stan Ehrlich market analysis. I always start out with the spider, the S&P 500. It's my favorite index, and also talk about some others. Today, we're going to be talking about interest rates again, look at futures contracts, and see which ones have new buy signals or signals in progress. We'll also be looking at sectors which have new signals or signals in progress, and forex as well. Let's go back to our S&P. Remember that we had a head and shoulder bottom in October. It produced the October lows on October 13th again. I told you a month or two in advance that it was about 90, high 80s, low 90% likely to happen. It did happen smack in the middle of the month in this case. So we've come up substantially. Yesterday we had a bearish engulfing, and it's my favorite sell signal, but it's not an official ER sell signal because of the lack of overbought condition. Custom index RSI and a custom version of a bearish engulfing. Nevertheless, I expected and said so that the market was going to come down some. We're only down 3 points or 2.5 now at the moment. Not very much at all. And bull markets go up much slower than bear markets come down, so I'm not surprised we're not making any major headway. I do realize that we're waiting for some political, economic, information from the Fed, and we'll see what happens with that information. My minimum expectation is for about 379, which is only 3 points away, give or take about a half point or so. And that is a modest, minor area of support that's already been tested a few days ago. So if that does not hold, I'm looking at 371, about a point higher or lower, which is much more significant for two major reasons. One, you've got some previous highs or lows of significance over the last couple of months plus, and you're going to be coming back to the neckline for the first time if it takes place in the next couple of days, maybe 3 days. Two reasons for it to stop going down around that 370, 371 price level. In the last few days, we have had, and by the way, we're almost low and last, bouncing very slightly. The DIA has a bearish engulfing. Yesterday, official ER sell signal. We were overbought for several days, as I talked about during those days. And finally, we have a bearish engulfing with the substantial overbought condition as well. Not only that, but with the DIA, we've been able to come back, and also the futures contract come back up into approximately the middle where my sell signal is mathematically calculated. Remember, this is 100% mathematical trading system, the ER signal system. And so we sold short at the red dot almost at the high of the day at this point. I wanted to get short at 326.33. The high today was 326.41. Currently 325.45. Approximately where it opened, holding up fairly well, but we're short almost at the high, small profit momentarily, looking for potentially move all the way down to 311. I'm going to say 311 and a half almost exactly. I believe it is exactly. It's the middle of a gap between 311.40 and 311.60, if I remember correctly, on the DIA, and the gap was created between the high on October 21 and the low the next trading day, October 24, over a weekend. That's my downside objective on the DIA because of the gap. It did have a double bottom formation. The second low was not, even though it was October 13th, a bullish engulfing with the oversold condition I needed for a green bar. So I put little green dots on it instead to point out that it's close to a buy signal that would have been official, but it didn't have one. It was a double bottom instead, and it had worked to its minimum upside objective already a few days ago, which was around 322.25. I'm looking for a break, obviously, in the next few days in the indexes overall. For the QQQ, the head and shoulder bottom is there. The bullish engulfing in the middle of October on October 13th is there. We've had a test of the neckline already very accurately 4 days ago. This could be a second test of the neckline on this dip. I need to watch for that. It looks like it's a little too close, but we'll see what happens as far as this dip is concerned. I'm not looking for much more than a test of the top of this blue support area. I'm dragging to the right into current data, time frame. Okay, now bonds, if I'm right, should be at least steady, if not higher, on the bond futures contracts and 10-year note futures contracts. Therefore, rates, actual rates going down a bit, which the market loves. And that would support a rally, but that's not what I want. So it's kind of a strange situation. Maybe we're not going to see a rally in the interest rate futures, and we're going to see it drop off because of the economic information coming out in an hour or so. Looking for a move down, more likely to be in the stock market index, which implies that we're going to see higher rates forecasted and discussed, and therefore this is going to be flat to a little bit lower. Again, futures contracts, the YM, the futures contracts for the DIA, the Dow Jones, has got a bearish engulfing, not on the top day, or was it? I think it was by a couple of ticks. So it's on the high day. And today we did get up to the new short price level, the offer, and we are short, and we're near the low and last at the moment, so looking good. I again expecting a decent break here. Don't have too many tools to come up with great prices. It looks like 31,000, but I'm not sure. Now for the other futures contracts, we don't have any buy signal, and we were slightly oversold on the ES on a 1 minute basis, so we can pretty much skip that. We're going to go back to daily data on the orange juice. We were overbought, and again today we're overbought. I'm expecting this to be a short-term top. Next, wheat, no particular comment. Corn needs a breakout. Next, platinum, slightly friendly, got a damn good buy signal near the bottom of the market back on September 7th. A couple of sell signals that work very well, but the lows continue to be higher and higher over time with higher highs. And that's the basic definition of an uptrend, modestly friendly for the moment. No major breakouts on the bull side yet. Gold, double bottom formation, did rally somewhat yesterday, and it did have a bullish engulfing on top of that. But we don't have a oversold condition. Minor retracement today, approximately unchanged. Looking for a little bit of a rally here. I think we're building a bottom. Next, got oversold substantially, rallied a little, going sideways a day or two. This is bonds. As you know, I'm somewhat mixed, a little bit bearish, I guess, in reality, for this particular chart to flat. Next, cocoa, sideways, nothing. Silver, nothing, neutral. Crude, fairly neutral in crude oil for the moment as well, although longer term bearish, I think. High grade, neutral momentarily. Soybeans, overbought for a couple of days, looking for a modest downside correction, a scalp on the short side. Heating oil, broad double top potential, slightly bearish, need more price action. Next, sugar was oversold, did bounce for 3 days, kind of neutral now. Natural gas, neutral. Soybean meal, major historical resistance, got over top right at the top of the rally, and overbought at the top of the rally, and new lows for a couple 3 days, looking for a little bit more downside correction. Bean oil, little bearish, overbought. Coffee was oversold and dramatically oversold. Extremely. You don't see a 4 or 5 oversold level very often. We were down there. And so it was a foregone conclusion. It was about to rally. It was exactly which day. And it was the big down day. Frequently, the bottom of bear markets are big exhaustion weakness type of climactic bearish type of price action, a wipeout. There's another capitulation. Next, overbought after 2 very sharp up days, looking for it to have a correction. That's rough rice, oats, neutral, and live cattle got overbought, a little bit more bearish. Pick the turning point on that. And lastly, 10-year notes. We've looked at this earlier. Bearish to mixed. Don't have a real strong opinion here. Looks like it's trying to form some sort of sideways range. And sectors. We did get a bullish engulfing October 13 on the bottom. And that was real estate for the Vanguard. iShare, real estate also, same thing. Bullish engulfing on the bottom, October 13th. Semiconductor sector. We're looking at the same thing. Bearish, bullish engulfing, October 13th, smack on the bottom of the market. And also a bullish engulfing, but not an ER signal officially on October 13th. I included this in the group because of a double bottom formation, which is broken out to the upside. I'm looking for more strength. The XLK, bullish on the bottom. XLU, oversold on the bottom, but not an official signal, but very close to an official signal. Consumer, bullish on the bottom, October 13th. October 13th is going to go down as a very, very important day, months from now even. It's been a month already. Well, actually, it's been only 2 weeks, a fraction already. We have a bearish engulfing, brand new. Yesterday, we are short. We have a small profit on the trade. And I'm looking for more of a downside move on XLI. Again, yesterday was the bearish engulfing ER official red signal. Lastly, forex, we caught the bottom and the euro dollar. The ER signal is green at the bottom. The date was September 28th. Same day, red on the top on the DX, the dollar index, as you would expect, but not always do we get complementary or reverse signals. That's what it should be. Typically is. That's it for today. Stan Lerdick, thank you very much. Have a profitable trading day. See you tomorrow.